extremely interesting note coming in from JP Morgan on Tata Power. JP Morgan today has downgraded their rating on Tata Power from an overweight stance to a neutral stance. However, baking in the fact that there has been significant amount of outperformance by Tata Power. If you compare it to the index, Tata Power is up almost 223%. When you're talking about the Nifty, it's up around just 25%. So Tata Power clearly has outperformed most of the analyst estimates. So JP Morgan has increased the target price from 155 rupees a share to 225 rupees a share. JP Morgan has gone in depth into, number one, explaining the kind of rise that Tata Power shares have seen, and number two, taking and talking about some of the risk factors into consideration. And this is why they believe that from this point on it will become quite tough for Tata Power to go in and outperform the market as it has been doing earlier. Number one, what JP Morgan is saying is that Tata Power is one of the few listed players in India that offers an exposure as far as India's decarbonization efforts are concerned. Remember, given that ESG is now a significant theme and ESG is a significant consideration being made by investors, especially FII investors, before entering into any company, Tata Power's efforts in this particular decarbonization drive, and the company, remember, has made significant investments in renewable projects, downstream solar projects, and also EV charging, that is electric vehicle charging stations that the company is undertaking across India. So what's happening is that, this has lent a significant re-rating valuation multiple as far as Tata Power is concerned. And other than that, JP Morgan indicates that the stock is now pricing in earnings and option value, implying a $6 billion potential valuation discovery for a transaction that may be due as far as the next 12 months are concerned. While JP Morgan has not clearly stated, we may hazard a guess and say that most likely JP Morgan is talking about the renewables power portfolio that Tata Power has been vocal about monetizing some of the assets. Earlier there were talks of an InvIT, there were also talks of an IPO, and that led significant credence. At this point of time, what is unclear is the timeline and the way in which the company will go about unlocking this particular value. So now when you're talking about all of this, globally ESG positive businesses are trading at premium multiples, especially EV charging plays, which trade at close to 5 to 30 times CY23 EV to revenue, where Tata Power is trading at 3.5 times FY25 estimate target revenue, and this is as per JP Morgan estimates. So significant progress made on network build out, but the stock seems to be pricing in well ahead of execution, and that is the risk that JP Morgan is signaling. So what they've done, premium valuation, significant run up, stock may be pricing in fundamentals ahead of time, and this has led to the downgrade as far as JP Morgan is concerned on Tata Power.